How do you do, my car stocks? My name is Cody, and I am back at you with another video. This time we are going over the best home loans for first-time home buyers. Now, every home buyer is different with different finances, different credit scores. So the best one for you may be different for the best one for someone else. And we're going to be going over all of that in this video. So stick around and we'll get to that in a moment. But first, I need you to smash the like button, smash the subscribe button, and hit that bell for notifications because we are trying to grow this channel to the moon. And I need your help to do that. So without further ado, let's get into it. Now, the most common home loan you hear people recommend is for first-time home buyers is the FHA loan. Because it's a 3.5% down loan, and it requires a lower credit score than some of the other ones that we will talk about. I personally don't recommend this outright just because there are better options for you. I only recommend it if it is your only option. And we're going to be going over why in just a second. But before we go over that, we are going to be going over my favorite loan type. The loan type I recommend. If you can do it, then go this route. If not, then obviously don't go this route. But that one is the 3% down conventional loan. 3% down conventional is exactly what it sounds like. It's 3% down, which is less. It's 0.5% less than the FHA loan. There's also lower closing costs involved with that 3% down conventional loan than there is with an FHA loan, which is why I recommend this over that if you can do it. When you're doing a conventional loan, a 3% down conventional, you are able to apply for certain grants. Some credit unions and mortgage brokers will have different grants or different programs for you for being a first-time home buyer that you can utilize to get the most out of it. For example, some banks have a first-time home buyer loan where they'll cover your down payment, and it's at no cost to you except maybe a minor cost in your closing costs. Some will cover your down payment without adding any extra PMI to you, which is fantastic because PMI can cost you loads of money into the future. This also makes you more competitive over other people who are also offering on the home. So if a first-time home buyer is using an FHA loan, they're looking to be more competitive if they're using a 3% down conventional loan with a local mortgage broker. The only time I don't recommend this is if your credit score isn't where it needs to be, because this is cheaper, it's less down payment, it saves you money in the future through PMI and PMI falling off once you own 22% of the home that you bought. So that's why I recommend that over the FHA loan, because the FHA loan can be a bit more expensive, but the FHA loan is terrific for anybody who doesn't have that credit score established that you would need to get that conventional loan. I mean, there are tons of first-time home buyers who have the conventional loan. I've worked with a ton of them. They put 3% down, 20% down, whatever they want to do. And that is terrific. I'm happy for those people that can do it. Not everybody can do that. So now we're going to the next best loan, which is going to be the FHA loan. Everyone's different. Determine how long you are going to be staying in that home, and that might determine the best route for you. If you plan on staying in that home for 5 years or more, then the conventional loan with certain grant programs might be your best option. But if you plan on moving within the near future, then the FHA might be a passable loan, or different type of programs with conventional might be your best option. The FHA loan. The FHA loan is a 3.5% down loan with a closing cost that is slightly higher than a conventional loan. It requires a PMI and a mortgage insurance premium at closing, which is why it becomes more expensive than the conventional loan, because the conventional loan does not require that private mortgage insurance premium. You have a PMI with the conventional loan, but you won't have that premium on it like you do with FHA loan. This also, the lowest credit score you can have to get into this loan is a 560, depending on where you go. 560 though, you'll be required to put 20% down the purchase price to get that loan. I believe it is 10% down. Don't quote me on that. 10% down, not 20%, on that loan to get it. With a 580 plus, you only need that 3.5% down. Now, depending on your credit score, obviously your interest rate is going to vary. If you have a credit score of at least 600 or up, you can utilize a down payment assistance program called Chenoa. Most lenders have this. If your lender doesn't have it, they might then might want to think about going to a different lender because this could really help you out. The only downfall of that is they're only giving your down payment. They're not giving you any extra for closing costs. So if you don't have the money for closing costs, then you have to ask for it or come up with the cash on your own. If you have a credit score of 640 or higher, you can utilize the Indiana Housing Program, which Indiana Housing is not what it sounds like. It's not, not paying your rent through government grants. It is an actual down payment assistance program or a grant program given you to by Indiana, and they can give you up to 6%, so it'll cover your closing costs of that the down payment of the 3.5% and the closing cost, which is going to be, it'll cover about, what was that, 2.5% if you get the full 6% of the purchase price. So you'll have about 0.5% left of closing costs to bring on your own. I recommend going through the conventional route, the 3% down conventional route if you can, but if you can't, then you have the FHA route that you can lean on. I've actually had a client who didn't believe they could buy a home because they didn't have the down payment to buy a home, but I got him in contact with the lender who could do a Chenoa loan, a Chenoa down payment assistance loan, and they were actually able to get something within 2 or 3 months of them getting approved for a loan. So it may be worth reaching out to a local mortgage broker or a local credit union. Don't reach out to local banks. Sometimes they're good, sometimes they're not. It's kind of a toss-up. But local credit union, local mortgage broker. Another item between conventional and the FHA loan is that with the conventional, after, like I said, 22% owned of the home, 22% equity in the home, the PMI automatically falls off. But if you are a FHA, that PMI does not automatically fall off and you have to refinance. But if interest rates are sky high when you finally refinance, then you're kind of screwed because you're not saving yourself any money by refinancing and you're stuck with that PMI. Which is why I recommend conventional over FHA if you can do so. All right, now the final one that I recommend is the USDA loan. The USDA loan is a 0% down loan program with really low closing cost. I think it's like you need about 3% of the total purchase price, but I think 2% of that is your closing cost. So that extra 1% is just to show that you have the extra money to pay your mortgage. The only catch with this program is that it limits where you can live. You cannot live in a city, so you have to be outside of a city in a more rural area. You need to be living where the population is smaller than a city. So that's the only catch with that one, but it is a 0% down, and you have to have, you cannot make more than a certain number of money every year in the household, including your kids, to be able to qualify for this program, which is why some people don't go that route because they can't qualify because they make too much money with the household. So just to recap, the very first one I recommend is the 3% down conventional, especially if you have a good enough credit score to qualify for their first-time home buyer programs, the grant programs, whatever, because that can help cover your closing costs and your down payment. If you are where you need to be financially and credit score wise. The second one, the backup plan, if you can't do conventional, would be the FHA loan. The FHA loan has a couple options with it. You can either use the Chenoa if you have a credit score of 600 or more, or you can use Indiana Housing if you have 640 or more. And Indiana Housing gives you about 6%. Chenoa only gives you about 3.5%. And the very last one is the USDA loan. USDA loan is at 0% down, but it can't be in the city. It has to be outside in a rural area away from the city to use that loan. It has a lower closing cost and it has a 0% down payment. Both FHA and USDA have a PMI on there that you have to pay for, and it doesn't just automatically fall off. If you got value from this video, please feel free to leave a like, leave a comment, share this video, hit the bell for notifications, subscribe, watch this video because YouTube thinks you're gonna like it, or wait to the end and click that video because you're gonna like that one as well.